Run for the hills, cause the bears are back. And fear and panic is starting to creep back in to the stock market. Is this a well-needed correction? Or is this the start of the biggest crash we're ever going to see in our lifetimes? I'm Biko Konstantinos, and that's what we're going to discuss today. Falls in all major US markets are accelerating. From their recent all-time highs, we've seen the following significant percentage falls in the S&P 500, the Dow Jones, the Nasdaq, and the Russell 2000 Small Cap Index, which is looking the worst of all. We've also seen very significant falls in the crypto sector. From their all-time highs, the following cryptos are down the following: Bitcoin, Ethereum, Solana, Cardano, Dogecoin. So we've seen a significant correction, but will we see a crash? To consider the likelihood of a full-blown crash, the first question I think we need to consider is, was this recent major boom in the stock market an actual bubble, which means excessive and rampant speculation? Because if we were in a bubble, then there's a much greater likelihood of an actual crash, which could lead to 30% falls or even greater than 50% falls as the excesses from the bubble are removed from the market. Now, there can be plenty of debate as to whether we are currently in a bubble, because you only really can tell a bubble in hindsight. And that would occur if we saw a significant crash to the likes of 50% or more, because only bubble-like markets can produce those significant percentage type falls. So to consider the question of a bubble, I'm going to refer to this article from Jeremy Grantham called "Let the Wild Rumpus Begin." Grantham believes we're in a super bubble, which he cites in the article have only occurred in the US in 1929 and 2000 and in Japan in 1989. He then cites super bubbles in housing in the US in 2006 and Japan in 1989. All 5 of these super bubbles corrected all the way back to the trend with much greater and longer pain than average. One of the characteristics of a bubble is that no one wants to hear the bearish case or the case for caution regarding the actual potential bubble crashing or popping. However, anyone who's been around the stock market for a long period of time will know that bubbles can occur, and the removal of the excesses and wild speculation from that bubble does cause a massive amount of pain, significant wealth to be lost. But if it was an actual bubble, it will definitely end up popping, because that's what bubbles do. So unfortunately, it's often the newcomers or the new investors that have recently entered during the boom, during the bubble, that aren't aware of prior bubbles popping, that aren't aware of crashes, and they will often keep buying on the way down and not knowing the actual risk or the actual change in trend or sentiment that can occur near the top of a bubble. For example, if you've always bought the dip for the last 18 months and it worked out beautifully for you, you won't recognize when a dip can start to become a correction, which can then lead to a fall, which can then lead to a crash when panic and fear actually enters the market with wild abandon and the bears take over. According to Grantham, the last year has turned this bubble type market into what he calls a super bubble market. And the most dangerous thing that he is suggesting is that the equity or stock market bubble has now been accompanied or joined by a bubble in housing and a bubble in commodities. So he's suggesting a super bubble across multiple asset classes. According to Grantham, one of the most important and hardest to define qualities of a late stage bubble is in the touchy-feely characteristic of crazy investor behavior. And he believes we have seen this in spades in the current environment, especially in meme stocks, EV related stocks, in cryptocurrencies, and in NFTs. So if we are actually in a super bubble, that means the popping or the unwinding of all these crazy excesses and speculation could occur anytime and may already have started with the recent falls. However, what's even more worrying is that the bubble is not only contained to the stock market, we've had bubble-like behavior across several asset classes including housing. So the potential for large falls across both the stock market, housing, commodities, etc. could have an extremely devastating effect across the globe. To cite an example of a bubble in both the stock market and housing, we can look to Japan. In the late 1980s, Japan had a record stock market shown by the Nikkei and also record commercial real estate shown by this line here. So from the peaks in 1989, we've seen a massive fall in commercial real estate which hasn't recovered at all. And we also saw a massive fall in the Nikkei, which is only starting to recover now after all these years. So the danger of multiple assets forming into a bubble at the same time and the popping of those bubbles can lead to devastating effects that can sometimes last longer and cause more pain than expected. So let's consider these simultaneous bubbles. First, we've got housing. Even though this article cites the US, there's been a global housing boom which has accelerated in the past 12 months. The average house price compared to the average income has risen dramatically. The average house price in many places around the world is now greater than 10 times the average income. That means if the average income was around $100,000, then the average home price would be over $1 million. So housing affordability is at its worst level ever, and that's the same across the globe. Second is the stock market, which has seen perhaps the greatest number of new entrants into the market ever, and the seeming belief that stocks only ever go up and that every single dip or every single small drop in price is another buying opportunity. This type of behavior helps to reinforce the idea that we are in a bubble-like market. Third is the highest price bond markets combined with the lowest rates that human history has ever seen. And fourth, we've got commodities including oil and most important metals, which has been pushing inflation upwards, as well as global food prices, which has also been rising rapidly. And all this has been pushing inflation upwards and is a stress to real incomes. Here's a visual of the UN Food Price Index, which has really shot up in recent times. Grantham states that even if assets fall 2/3 of the way back to historical norms, the total wealth loss will be massive. And if this is compounded by inflationary pressure occurring at the same time, the effects on the economy could be devastating. So the final phase of nearly all bubbles is an accelerating price rise. It happened here in 1929, in Japan in 1989, and we can see it currently occurring in the Nasdaq and in the S&P 500. We've had speculative madness displayed by the meme stocks GameStop and AMC, which rose ludicrous multiples even though the companies economically were in terrible shape. We've had some cryptocurrencies such as Dogecoin and Shiba Inu just go parabolic and created many overnight millionaires. And we've also had simple announcements like Avis going to buy some electronic cars and seeing a tripling of their share price in a day. I think you might agree that these sort of rampant speculation is a sign of bubble type mania. So how will this bubble end? Well, so far it's been able to overcome so many things thrown at it, like persistence COVID, inflationary pressures, the threat of higher interest rates, and it's still managed to stay strong. But according to Grantham, this could be likened to the death of a vampire. When just you're beginning to think it's immortal and this bubble or these price rises will never end, finally it just might keel over and die. So has this seemingly immortal, indestructible boom finally succumbed? I don't think we can tell at this stage, but this bubble may have already popped. And whatever happens, it's gonna be a wild ride. Another characteristic of the final stages of a bubble are when the speculative element in the stock market start to underperform and the stock market starts to narrow and gets carried by the strongest type stock. This graph for 2021 shows us that the two major indexes of the 10 largest names in the S&P 500 and the S&P 500 itself have been carrying the stock market in 2021, and the Russell 2000 has started to drift lower, and the Goldman Sachs non-profitable tech index has started to greatly fall down as well. So we've got a slow falling of some of those excesses, like some of those meme stocks or those previous speculative type stocks. So more and more stocks are not participating in the current boom. So that's often a good indicator that the bubble is about to burst, which is what we're actually seeing in real time. There's some amazing chart analysis that we can do, but I'll save that for another video. To see my video on why the markets are so expensive and at risk of a major crash, please check it out here. If you enjoy this content, please give the video a like, as that will really help the YouTube algorithm share this video, as I want to support you in all your investment decisions. Hey, and make sure you subscribe to my channel, because I'd love to have you on board so we can go through a broad range of finance and investment topics. I'm Biko Konstantinos. I really appreciate you watching this video. I wish you all the very best during this volatile period for the markets, and I'll catch you in my next video.